Hello, 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 everyone. Happy Monday. How is everyone doing today? Happy Halloween. Yeah, see, I'm dressed up in my tie-dye. I guess I'm going as a deadhead. So, and by the way, Rams, if all figured you'd get it. I'm Uncle Sam. That's who I am. Been hiding out in a rock and roll band. Maybe the Fed should go hide out in a rock and roll band instead of what they're doing. Who knows? Welcome, welcome, welcome. Why the weird title? Well, it is month end and we do have some flag patterns setting up, so I thought I'd do a little dead reference there. And the dead seems appropriate on Halloween. Good morning. Christo's buying all the dips. Well, then you'll like the flag pattern pullbacks today. Christo on the FTSE GSA pick is one of my ones to watch. Deutsche Bank on the DAX. Okay, it's Christo putting out some information for everybody. Thank you. Good morning, Legion Reaver. Good morning, Patrick. Good morning, Options 22. That rock and roll band also happens to be the Heart of Gold band. Wow, it's Grateful Dead Monday. So let's get right to it. You know what? I really appreciate everybody being here. Thank you so much. It looks like comments are working today. No tech issues so far. Uh-oh. Had to knock on some wood there. Good morning, Sterling. Patterns matter. Patterns still matter. Remember, I want to clarify something. You don't test out patterns and go back in history and say, well, there was this person speaking and this pattern happened. Else you'd never get through testing. You'd never get through testing. So patterns develop due to what's digested by the market, what's in the past, what's thought to be coming up. And that's how they test out. You don't go, oh, that pattern is just irrelevant because of this. Otherwise, you'd never trade in because everything could always be irrelevant due to something. And the probabilities are the probabilities. Now, unless you've tested out specific probabilities, like there are probabilities tested out around Fed meetings with Fed announcements, but then you have to test them out with certain conditions. And that's a different story. But if you say this pattern doesn't matter because of this, or this double doesn't matter because of it's a Fed meeting this week, or this flag pattern doesn't matter because of this happening today. You don't know. Maybe that's what set up the flag pattern. Again, you got to trade the probabilities, not what you think's going to happen. Otherwise, you're always going to think something's going to happen. Good morning, Anissa. Good morning, Connor. Christoph, thank you for being here. Mike Wilson at it again says the end of the Fed tightening is nearing. Oh, well, then he's contradicting Nikki Leaks. Nick Timoros. Again, forgot to mention, besides his Wall Street Journal article that came out over the weekend, he was on the morning shows yesterday, touting the exact opposite. A lot of patterns are the consequence of human psychology. And you can dissect them that way. It's the way just things react. If they really pivot in 2023, well, they could pivot in 2023 after a pause. Okay, that's not off the question. That's not off the table. A pivot in 2023, especially in the latter half of 2023. But anybody who's thinking that's going to come earlier than that is drinking the Halloween punch a little too much. Can we do that after the close strategy? So, yes, and Grand Rising. All right, let's get right to it. Minor information out today. Chicago PMI at 15 minutes after the open. Dallas Fed an hour after the open. This one is just going to see relative how big it's still in contraction. Chicago PMI still forecasting contraction. The only thing that would be really surprise it is if it got out of contraction. Other than that very, very quiet day. Mixed market map so far this morning. Oil pulling back, crude's pulling back, and the oil stocks are down a bit. Remember, we still have some more oil and energy earnings this week. Don't really need to look at this. Fed Watch tool climbing back up. I mean, I was shocked that this fell close to 80% because that 75 is baked in. Anything other than that would shock the market. So that is, and I doubt they do that. Fear and greed, still in greed mode. So watching for the pullback. Today, there's not anything really big in terms of market moving earnings. And after the close, nothing. Nothing. I mean, if you're following these companies, I'm going to check in on Avis Budget Group. And then I'll just peek around with some other stuff, but nothing for my expectation is going to move things. And can somebody tell me for Friday? See, I got to move now. I got to move. Look at this. I'm blocking. What? You know what would have been great down here in the corner? Hershey. They should have reported today. Wouldn't that have been fantastic if somebody should have had a sense of humor and reported Hershey on Halloween? That would have been a great report. They should have bumped that up a bit. Give me your thoughts on that. You know what? If I was in charge, that's probably why I'm not in charge of anything, because I would have done that. You know? Make life a little fun. Have Hershey report on Halloween. All right, this is what I'm talking about. If you wanted a textbook, whether it works out or not, but if you want a textbook flagging pattern, here it is. Here it is. This is a textbook flagging pattern. Because it's textbook, it does not have a higher probability of working out. Some of the funniest patterns, some of the best looking patterns I've ever seen is like, this was a slam dunk, and then it doesn't work. It's one of the ones that doesn't work. But I just, for screenshot purposes, if you like to do a, trading journal, or you like to keep really good patterns for just a reminder what it is, this is a really nice flag pattern. This would be a bull flag pattern. So far, the orderly pullback. Now, does that mean it has to go to new highs? No. But this is what I'm going off the open. By the way, if it continues to pull back, it can stick in a flag pattern. My key support area, 38.73 to 38.65. That's what I'm watching for, a continued pullback. Why? It's slamming into this. On a pullback into the open, it's slamming into this prior resistance becoming support. Yes, we have a clear path down on the 4 hour. If we look at that on the 1 hour, the only pause, and this is an advanced clear path on the 1 hour, the only pausing area is right in front of here with the lows sticking in there. And then you have another break. So if this key area breaks, especially with weak internals, then I will be more on the bearish side. Remember, it is month end. You can have repositioning, especially going into the close. So, key area right there based off the 4 hour. Also, we have the rising rotation zone, which you can still flag back into it. Short term. Here's where flags are slightly tricky. Because the breakout, if you break above this aspect, you're still on the short term hitting into this key breakdown level, which is right at 89, or look at the level right here. 88, 38, 99, 50, 3400. Above there, then you have this resistance. So advanced plays, yes, is breaking above the top of the channel flag line. However, you have to be nimble because anywhere in here could be a false breakout. I really like it above 39.07. This is just a tough with this little pullback area. Also, your 39.07, I have to raise that. 39.09 would be my confirmation point why that's above the 62.5. Now, from the short perspective, then above that, I'll start targeting the recent highs. And for the shorter term, this is a great area. Now, if we pull back more at these levels, we'll have to adjust. The harmonics, you'll be lowering this. See, you'll be lowering this. Let's say it came back here, you'd be lowering it. Right now, my minor levels for the day would be 39.29, 39.34. Major level, if we did get momentum, would be 39.47 area. So that's exactly how I'm setting this up to the open. If this doesn't change much going into the open, we start breaking below 38.88 on a micro time frame, I'm going to be watching for that 38.73 pullback area. So that's how it works. Is this a potential little mini double? So far it is. So far it is. So now this can be traded on top of the double pattern, which, you know, you start getting. Let me see how it looks at the 15-minute. A little sloppy. It's a little sloppy of a pattern, but your first warning sign is at least a 15-minute close above 39.0250. So that's combining some micro and bigger time frames. Just from the bigger perspective, then I'll get to just the NASDAQ, the Qs, and the spiders. Keep in mind, for people tipping overly bearish, there is not a long-term. This is so far is a minor topping pattern. Remember, I like to watch the secondary reactions because the secondary reactions give a lot more information than the primary pullback. The primary pullback hasn't even gotten to the last breakout zone. And then even below that, you pull back into the daily rotation zone, a retest of the daily 50, which is hooking up with the rotation zone, and key major support coming back at 38.03. And there's a pretty substantial gamma wall there. All right, so even on a pullback, you have stopping point. You have stopping point about 38.35. Then you have, I should say, potential stopping points. Then you have potential stopping points right in front of 3,800. So that's what I want to. So that's why you have to be nimble if trying to jump on this from the bear side, which means it doesn't mean it's not tradable, but I would be aggressively moving down stop levels, especially at the key levels, because of any of these, we could get a decent secondary reaction. Daily rolling over from a cycle perspective, trying to get out of this overbought. And yes, we do, looks like so far setting up for a single divergence. But does that mean new lows? No, this does not presuppose breaking down with this little minor of a pattern. Let's just peek at the NASDAQ. Remember, the NASDAQ has not been able to get above the October 25th highs, which has chipped away the 25th and the 26th at the 50. That's going to be on any substantial rally today. 11,685 area is going to be my key target if we do get a substantial rally going on. This also flag pattern. The key area I'm watching for support on this is about 11,420. Minor support just slightly down here at this level. Why? I got the rising 4-hour rotation zone and this little resistance becoming support base. We do start breaking below this. We are in the clear path move though. And there's not a lot of key areas for support below this 11,420. So we could see if we get weak internals and start breaking below 11,420, the bigger pullback. To the upside, yeah, I mean, technically, which might be invalidated by the open. You do have that little mini double. Still, the same thoughts go on for the flag pattern as I discussed with the S&P. So we went through, overall, you don't have that same kind of support in the NASDAQ. The NASDAQ's been much weaker. So on a downside break with weak internals, I favor the shorts in the NASDAQ, the longs in the S&P or Dow. That's how, when you got these market divergences with the NASDAQ being the weaker one and the S&P and Dow being the stronger, you can favor one thing for longs, another thing for shorts. The next, see, you don't even have a lot of great stopping. This is a minor significant level right here about, oh, that was the 11. Then we got 11,317 as the next key support on a bigger sell-off. This is the problem also. You're going into a big congestion with a lot of volume in here. So it does not get strong shortable until 11,953, and early warning is about 11,062. We had a gap up in the VIX. Let's just get to the spiders so far. Right now, is this a minor double top pattern on the spiders? Yes. I'll look more at aggressive versus conservative targets. This is very minor. Let me just see where these other harmonics go. So we've already pretty much hit this this nearly harmonic. So the reverse harmonics are done. So the key area is 379.33. Before that, I'm watching for the minor gap fill play. And still, since these little reverse harmonics are virtually done, on a push up, you'd have to, on this pullback move with the gap, then you do forward harmonics here. That's why I was double checking that. Because this is going to be at least, hopefully, a short-term pausing bar. Now, we've already, no, we can't even say that's a key level there. So, we're opening, looks like, around the 386.80 level. My first support will be 384.92 to 385. We break below that. That's just a weak level, but I got to use it about 381.62, then the 379.33 if we start the bigger pullback without invalidating this. Double. Remember, anything in this pullback area on the 4 hours into the 4-hour rotation zone, and major support coming in at 378.07. On the Qs, besides the gap fill play, 276.53 is the first level of key support. The minor level going into the open, I would be utilizing right around the 278.80. So on a continued push down, 278.80. Then other than that, we start breaking above Friday's high, which is 281.69, would just be targeting this very strong resistance area just in front of 284. Above 284, you can still use, this could go shift from reverse to forward now. It's not going to change the levels that much, but your major next level is 288.38. What I was talking about also with the VIX, gap up today, well, so far, and we have a very narrow little range here. So with the VIX, on any push up, you have key resistance to 27.17 to 27.43. So a push up in this area is minor bearish. Oh, I start getting tipping more to the bearish side above 27.43 area because you're still in there's some major congestion in here. If we get below 26.80 with the gap, I start watching for this gap fill play and more of the bullish mode. So that's what I'm keying off of there. All right. Yeah, thanks for putting that in. Brazil dropping at the open with their election results. That's only going to be minor. It's going to be interesting to watch commodities from that perspective. ES is small gap down from 39.22. Does that make bullish patterns have higher probabilities? From my standpoint, only if they trigger the gap fill probabilities. But there is that gap magnet, so you do have to consider that. What else? Let's peek in at the notes. Then I can loop back around. The notes could be setting up for a more substantial topping pattern here. But so far, testing, remember I talked about the inside bar on Friday, testing Thursday's lows, testing it but not been able to break it. So I'm still watching Thursday's lows with a test. What would be my favorite pattern is then a retest from the underside and a rollover. But that's still key today's lows are slightly lower, but just a bounce back from there. So 110.16 is my key break point. Other than that, long way off from triggering anything to the upside. So unless we break to the downside, it's sit on hands in the notes. Trying to get out, cycles back to the bottom after this pretty strong rally. And the notes might be a little more muted with the Fed meeting coming up. Dollar index, remember, didn't triggered the double on the daily, but not the weekly. And this was a lower probability double since against that very strong weekly rotation zone. So far, dollar pushing up, but your key breakdown resistance is right here. So on further dollar strengthening, I'm watching 111.24 to 111.65 as the two key levels there. Tying in with that, Bank of Japan cannot be happy with this move. 149.38 is key. I think it's, 149.38 is very key. Not only because it was a prior snapback resistance from the intervention move. Then we had the follow-through move. No, this is not a double bottom. It's not reversing. However, that same area, which people would mistaken as a trigger for not a double bottom, is the 62.5. So we get a close above there on a 4-hour daily time frame. We should retest the 151 area based off the probabilities. Again, no guarantees there. Euro, still after triggering the double, not anywhere close to being validated. Watching for support about 98.80 to about 98.60 on this pullback. Pound, so far sitting between the breakout level and this key resistance that it successfully retested and now retesting on today. If we do start breaking down below the close from Tuesday, though, I'm watching for a pullback to 113.50 area. Bitcoin. So many things have similar patterns. Bitcoin breakout is still 20,850. Breakdown 20,371 in the short term to retest the 20,000 area. A close below 20,000 on a daily triggers a double top pattern, which would be a pullback to the inside higher little base of this horizontal channel and could turn into more of a shake and bake pattern. Tesla, besides the little Russian gap fill, yes, the double is confirmed but not triggered. The key area you're watching is 229.82 for the bullish case. Other than that, it would be the minor gap fill. The key support coming in at 217. We get below 217, 211.80. A 4-hour or daily close below 211.80 is probability-wise for a retest of this low area. Natural gas from Anissa. Thank you so much for being here. Natty gas right here. All right. Let's just take a look. Remember, we did complete that pretty big double pattern. Let's see where we sit. Let's see where we sit against some short-term harmonics. So the reverse harmonics already hit. Reverse harmonics already hit. Slamming into key major overhead resistance. This is not a double. And your key support area is coming from the gap open on the Thursday the 27th. But you start breaking below this 619 area. See, you're just pulling back in the short term since it's already completed the major bearish patterns. And I think it got a little overdone just from my perspective. To the downside, on a pullback, you're going into that 4-hour rotation zone. So on any shorts, you'd have to be nimble. But pull back into this area, as long as it holds 555, is a short-term potential buy. I just be careful with cycles at the top. So this next pullback is going to be interesting. The only thing that tips me into short-term bearish mode is if we start breaking down. This is not a double, by the way, but this point is key. This key 555 low is key because then we could set up for a retest of these lows. On your retracement levels, there's just not a strong pattern here. I would not be overly aggressively bullish because it slammed into this and is pulling back with cycles at the top. Below this is 537. The only thing that really, again, we could see the pullback into this area, not a double, pullback in this area for setting up for another bullish play. The only thing that tips me bearish is below 536.90. 536.9 really. Other than that, it's just a mess. This is where I wouldn't force. If you bought off one of these patterns off the lows, then it's trailing stop. From my book, if you're looking to reinitiate shorts, there's a fair amount of major support in here. Would not be overly aggressive. Tap in that rotation zone, but remember, it broke down, and then we have the snapback. All right. Christoph, 110.23, 155 on Apple hit the tape on Friday. Big money positioning themselves for something. And again, you don't know what that is. I thank you for just saying them positioning themselves for something because you don't know if it's a bearish play or a hedge play. But you got the 155 puts in Apple. So, and that could be already to hedge something, Apple right here. Essentially, that was, the right near the close. So that was at the money on Friday. But that could just be a major hedge position. You don't know. I'm going to be putting out a longer term video at some point on Apple and my thoughts on that for the people who are looking to do Apple plays. Right now, it does not have any good. There is no fantastic setup on Apple. There just isn't. All right, let's peek in at the S&P. It's open. It is open. Very quiet open, remember. So your minor support is 38.83. Still tested here. The next support zone is 38.73 to about, and this is going to be the declining flag area. So nothing, very quiet open. Let's check at the tick. Tick slightly negative open, so it's a little minor selling pressure, but not in this key area below 1,000. So right now, a minor, very minor short bias, very minor. Let's check the NASDAQ pushing lower, coming into the key support zone. This looks like this little double, at least in the NASDAQ, is going to be off the table. So it's now watching support. But overall, minorly bearish open, nothing major. Nothing major yet. Very quiet. Let's take a look at the Dow. I'll loop around. I don't have much to do on the open for the first couple minutes. Dow holding the 4-hour rotation zone with the flag pattern. So my breakdown area is 32,640 for the Dow, but that would just be for a potential pullback to 34,450 into that clear path move. And the Dow has a very decent clear path move. Remember, 4-hour, when you see the clear path move, we want to vet it on the lower time frame. The next lower one would be the 1 hour, and the breakout zone is back at 32.77. Nothing so far to invalidate the flagging patterns on the S&P, the Dow, or in the NASDAQ, testing the bottom of the flagging pattern right now. All right, I'm gonna be out of here. We're gonna see with this not being able to break down. Gonna watch the 0 mark, and then for a change, going to start watching if we get these spikes at least to 400, and then after spikes to 400 to see how well we pull back. If we don't start getting a lot of negative ticks below minus 400, then we probably have a choppier shift in the market, at least for now. By the way, I did not touch on crude. Sorry about that. Crude, after hitting the first target, no, the double is not invalidated, but the key level you're watching on a daily closing basis and or 4-hour closing basis is 84.48. That's the current stop level for the that's the farthest current stop level for the on a closing basis in the trade through is 83.42. So far, a pullback to the breakout zone. All right. Thank you, everybody, for being here. You're welcome, Christoph. You're welcome, Anissa. And I will talk to everyone after the close. Will probably be a shorter session today due to trick and treaters. So I will see everyone after the close. Bye for now. You're welcome, Andrea. Let's see. Where's